Okay, hello everybody. Welcome to Korean Atlanta Mentorship. And in this video, we're going to talk about what to do when you're drowning in credit card debt. And we're going to use something called velocity banking to get ourselves out of that, or probably even better, never get into that situation. But before we get started, something that I just noticed was that as I was making a YouTube thumbnail, I was like, why does this look so familiar? And then I realized that I recreated the Mountain Dew logo, right? Isn't that weird? Pro tip, if you ever decide that you're going to become a YouTuber, always create the thumbnail first and then create the content afterwards, right? So let's go ahead and read this right here. This is from the MyFICO forums, and if you've ever been to the MyFICO forums, it's kind of a, I would say, an unusual place because it's you get good information here, but you also, like, in many people's signatures they talk about, they kind of list, I don't know if it's like a status symbol. Hold on, let me see this, about like all the credit that they have, like, oh, I have this card with this limit, this card and this limit. It's pretty cool in a way. And then people list like their credit bureau scores in their signature. I guess it's a way to flex. I probably need another way to flex too, but I don't like to post in forums. But let's go ahead and read the post. Please help drowning credit card debt, credit card and loan debt. Hello, I really need some advice what to do with my financial situation. I was working full time making decent money, but ended up getting laid off in March of this year. I ended up getting on unemployment for the last 6 months and was able to continue to live and make the minimums of all of my credit card and loan payments. But unfortunately, I haven't been able to find a job that pays enough to make ends meet. And now I'm working two minimum wage jobs just to live. I have no collections, no late payments, or anything on my credit, but have maxed out all my credit cards. I have about 12 different ones. You can see my signature. I also have a car loan through a credit union and a personal loan that has horrible interest for 12 grand because I was desperate. Um, I'm at the point now where I can't pay my personal loan anymore because it's $549 a month, and I'm hoping I can make minimums all my credit cards, but not sure if I can make that happen either. I'm but I'm going to make sure I pay the card because I absolutely need that. What I'm asking for is what's the best option here? I really want to default on the personal loan because that is a huge payment a month, but I know I will get sued if I stop paying them. Plus, I don't know how it's going to affect the credit cards I currently have. I'm just really disappointed in myself and upset because at the beginning of the year I was at 750 credit score, and now with all this debt it brought me down to the 500s. I know this is long and I really appreciate everyone who reads this. Thank you, right? And you can see all the credit cards he has here. I'm kind of wondering because these kind of look like low credit cards, 300 limit, 300 limit. If these kind of got reduced after his, debacle with the credit cards. And where is this? So March, and then you see this post is in November. So how many months is that? March, April, May, June, July, August, September, October, November. So about 9 months. So you can see how within 9 months everything just kind of went down a hill. And let's say you do kind of, run into financial hardships. I know it's very hard, especially if you're making two minimum wage jobs and maybe you're making good money. This is the problem in many instances, and I'm not blaming this guy. It's just when we do have so-called good, quote, good job, we don't learn to build that financial foundation so that when the good job maybe disappears, right? Are we still going to be okay? Right? I mean, think about if we had a $400,000 home equity line of credit available to us, and then poof, our job disappears, are we still going to be okay? Because yes, because that now that's your emergency fund, right? Now that's your emergency fund, and then now you can use that to hustle and work hard, or maybe build a wholesaling or fix and flip business or whatever thing, like insurance, things that you can do to hustle because you got that huge safety net. That's what we got to make sure we got to do. Now, here's the thing: if you still have income coming in, right? I mean, take a look at the mindset. It's just everything is minimums, right? So I'm at a port because hold on, I'm hoping I can pay all my minimums on my credit cards, and there's no talk about, oh, I'm gonna put all of my money into my debt, even when I'm making minimum wage jobs, because whatever money that we put in, all the money we put in, if we're doing it correctly, we could pull it out if we have a line of credit, right? So if we're financially drowning, First of all, number one, we want to make sure that before we ever lose a job or don't have money coming in, we have a good financial foundation. So if you have tons of credit, and even this doesn't really seem like a lot of credit to me, to be honest. But again, I don't know if the limits were reduced. But if we have tons of credit, like 200, $500,000, and we lose our job, we'll be okay, right? Right. So if you got a paid off house and you get a home equity line of credit and you're still working, um, you got that huge emergency fund, right? You got that. It's a huge emergency fund. All right, so let's go over this. Now, the situation that I'm going to go over here is not going to be exactly corresponding to that gentleman's forum post because um, I don't know his financials. He just kind of was a little bit vague and scared, and I get it, right? Life is scary, especially if you're you thought you were doing well, and then all of a sudden, poof, you lose your job, and then you did. Here's the thing: if you went from a 700 FICO score to five whatever in a couple of months, you can almost kind of see how much work you needed to do to build a stable financial foundation. Because the whole point of all of this is to make sure that, hey, even if we lose our job, or hey, we get to a point where the job is optional, then we'll be okay, right? Like, and here's another pro tip: um, don't let your job use you. Use your job, right? So I know someone who manages like 100, I think, short-term rentals, and he said he got a W-2 job. And I think the reason he got a W-2 job is because of bankability, right? Banks don't like self-employed people. So sometimes you got to do what you got to do, but at least he's using the job and the job is not using him. So many people let their jobs use them, right? So there's nothing wrong with the job, but you got to use the job and not let the job use you. Same thing if you're a landlord, you get the tenant to pay the rent. The tenant doesn't, control you, right? Same principle. All right, so let's get into this. So what is velocity banking? All it is a debt payoff strategy using a line of credit as your main operating account. Okay, and there's only two requirements. Number one is a budget, and we go over this over every single video. I've made over 100 something, 300 videos. It'll get to 10,000 one day. One day we'll be at 10,000, and you'll be like, you did the same video over and over again. And yeah, we did because that's how we become masters at our craft, right? So step one of velocity banking is a budget. So income, expenses, leftover savings, and then we do our expense breakdown. And our expense breakdown, we list every single debt that we have, including a mortgage and all the other good stuff that are not expenses that are not debt. So we always assume that this is always going to be there. Whereas our debt, we plan to eliminate so that we can increase our cash flow, right? And this was the example I've been using for the past couple of videos where, you make good money, like really good money, but you were irresponsible with credit card debt. Um, and now you're at negative $644.48, right? Pretty crazy, right? Okay, so now let's go ahead and do this. And so now we're going to do a few other things. So we're going to copy the budget. Okay, let's go ahead and copy the budget. Okay. And then where's the savings is going to be zero. We're going to do the exact opposite of what mainstream personal finance teaches us. You ever tell a family member, like, hey, I don't have any savings, and they like freak out? Though that's kind of like how you know that you're doing the exact opposite of what mainstream society teaches you. Because you tell a family member, hey, I don't have any savings in my savings account, and they freak out. And then they'll be like, why do you use a line of credit as your main operating account? And then another freak out. Anytime you tell a random stranger, or maybe even someone you know, what it is that you're doing, and they freak out, that's how you're doing the contrary of what society expects you to do, right? So what now we need a home equity line of credit. So what is a line of credit? All is a financial tool where you can borrow money, pay back, and use it over and over again. And so what we're going to do is, hold on, let me go ahead. Oh, I need to erase this. So, all right, so let's just do this. Okay, so let's say we're going to make our line of credit as our main operating account, right? So in order to make our line of credit as our main operating account, we need to move some of this credit card debt into that line of credit. And let me hide this for now because this is not going to make sense yet. Hide. Okay, so our line of credit is going to be our main operating account, and the actual velocity banking strategy, once we make our line of credit as our main operating account, is that your paycheck, your pay, goes into the line of credit, and then your expenses comes out of the line of credit, right? It comes out. So pay the entire 9,000 comes in, and the expenses comes out, and you'll be like, well, this makes no sense because you're the line if the line of credit expenses are $644 more than the income, then what's the difference between here and here, right? But again, let's just do some debt transfer. So we're going to move this credit card debt, all of it. So there's 10 credit cards and then $167,000 here, right? And this is month 0. So now we're at the negative, and then 0, 0, 0, 0, 0, 0, 0, 0, 0, right? And so now we're at a positive $4,701.35, right? $4,701.35. So how do we go from here to here? By not making the minimums, right? So it's kind of the opposite of philosophy of the gentleman in that My FICO forum post, because he's just like, I'm in survival mode. But hey, even if you're working 2 minimum wage jobs and you had a line of credit available, you could put all the money from your income minimum wage jobs into that line of credit and then pull it out when necessary. But the problem is that when you're just making minimums on everything, this is what happens, right? This phenomenon that I'm talking about is called segregation of income, where your paycheck comes in and you're just making minimums on everything, including your credit cards and loans, and you're wondering why it is that you're broke. And that's probably what's going to get you from a 700 something FICO score to 500 in about 9 months, right? In about nine months, that's probably going to happen. So again, now what we do is we're going to do the velocity banking strategy, put the entire paycheck here, and then after every single month we go down by $4,000 plus some interest, 4,700, right? And so you just need to memorize these 3 formulas. If you don't know them, or if I'm going too fast, just pause the video, right? But if you want the next month, it's the previous month plus 1 equals J2 plus 1, right? You see the cell highlight. If you want the next month's balance, it's the previous month's balance plus the previous month's interest minus this cash flow, 4701.35, right? So, and then in order to calculate the interest, it's based on the average daily balance, right? You take the average of these two numbers, multiply it by the interest rate, which is 0.1, and then you divide by 12, right? So that's how you calculate the interest. And then once you've got these 3 formulas set up, then all you do is copy and paste, right? Copy and paste. And then you could see that within how long? The 43 months, it's gone. What's 43 months? So 43 divided by 12. Whoopsie, I took it there. 43 divided by 12. So about 3.3 years and a half to pay off $167,000 of debt, and you were drowning. Like you were drowning. Oh my goodness, I'm financially drowning. I don't know what to do, and so I'm gonna ask the internet for help. And please help me, right? And at that time, it's kind of too late. Well, actually, it may not be, but um, for the most part, you got to kind of be prepared for these things. I'm always prepared for, the situation where I lose everything, right? I'm always prepared, like mentally in the back of my head. I mean, it'll suck, but I'll live, right? Or at least I think I will, right? Because again, that's why I've amassed tons of credit, because that credit is essentially like a cushion. And as long as you have the cash flow, you're going to be okay. But, too many people, they're just using the credit cards and the debt products the way that the bank wants you to use them. And then you wonder, why is it that I'm here when I could just have been here if I use my line of credit as my main operating account. We go from negative to positive literally on day one, I always emphasize that. Like you do that. And some people are like, well, nobody has a line of credit like that laying around. Well, I do, right? Like I got this is a $15,000 line of credit that I never even use, and I probably got to use it because, if you don't use their products that the bank lends you, that you tend to close it, right? So we got to make sure that we let the bank make a little bit of money, but not like an insane amount of money, right? I'll give you a little bit of interest, but to help me, cushion the blow just in case I have some financial setbacks and I need to manage my cash flow. But I'm not going to let you make, 2 to 3 times off of me if I get a mortgage on a house, right? All right. So now one thing I do want to mention is that this thing called savings, right? You don't need actual money in your savings account to have savings, right? Because guess what? And let me go ahead and see if I can unhide this. Um, let's unhide, right? Your line of credit is essentially your new savings account because you have this $200,000 available limit, right? And your savings is $200,000 minus this balance. So if we just go ahead and copy and paste, the more we get into this strategy, so it's probably right here, then our quote savings just grows and grows and grows. Now, is it likely that you're going to spend 50 grand and like at this point just on something stupid unless you're doing like Airbnb? Probably not. Like unless you're like traveling the world and quote trying to find yourself. So, maybe your average cash flow may fluctuate, but it's going to on average be like this, right? So that's why you don't have to be exact on your calculations. But if we're worried about, oh my goodness, emergency fund savings, hey, you're growing it with your line of credit because this is essentially your emergency fund. And if you have maybe like a car emergency, a couple grand, I had that with my own car, no problem, right? Because I'm just dumping my entire paycheck into the line of credit, expenses out, and then going over and over again. And then so now, at once this is paid off, then we quote have $200,000 in savings, right? We also have the credit cards too, but we don't. We only want to use them up to the point where it equals $2,500 because the advantage of credit cards is that it, they can delay interest, right? So as we're doing this strategy, I actually would I use my credit cards to pay for stuff, right? Not immediate, not from the line of credit. My credit card delay the interest by amount a month, and then just keep paying it down, right? So that's the beauty of using the credit card and line of credit combo strategy. I'll probably make another video about that another time. But yeah, so people drown all the time from this stuff, and if they just had a line of credit available, that would kind of be like their life raft, right? I don't know if this guy ever got a line of credit or just regular credit cards. Visa Simona, Walmart MC, American Express Platinum, Betnamo Visa, Credit One Amex, Credit One Visa, Kohl's, Living Spaces, Amazon, J. Crew, U.S. Bank. He didn't get a line of credit. You should, if you get like 5 credit cards, get like a line of credit too. Put a little bit of mix in there, right? Put a little bit of mix in there. But all right, not criticizing this guy. I'm just saying that it happens to a lot of people. A lot of people drown in credit card debt and loan debt because they're not putting all of their money into the debt, right? You got to put all of your money into the debt, and the line of credit can help you get there, right? So, yeah. All right. Well, that's it, everybody. So, hopefully, you enjoyed the Mountain Dew thumbnail. I'm trying to think. Is there anything else that I want to mention? Well, probably by next month I will have the Google form open again. I need to get to that. And again, if you didn't know, I do have a membership that's 99 cents a month. So if you join it, you get access to emojis and a once a month exclusive live stream. You'll notice that I do live streams, but it's only for the channel members, 99 cents a month. All right. Well, that's it, everybody. Have a good night or a good day, and we'll speak next time.